everyone. Welcome to the Stock Market Morning Prep video for Thursday, June 4th. We did get a little reaction from Mario Draghi's comments early in the pre-market. We did pop up a little bit, and then we kind of died, actually, as really price action has been doing of late. Just kind of making the one move and then pretty much staying stagnant. So overall, we haven't gone really anywhere. We did close higher than the previous day, but we're still stuck in this consolidation range pretty much the last several months, and it has been very boring, to say the least. However, we do know that there are things moving around, and such as bonds. I mentioned that bonds may be topping like several weeks ago, and sure enough, they got hammered yesterday. And I'm surprised the equity markets didn't actually follow suit, or at least show some sort of a reaction that bonds were moving lower rather quickly. The 10-year is rising, and we are going to be challenging a very long-term uptrend line in the TNX. And if you pull that up, you'll see it comes right around 2.6%. This is a long-term trend line. If that is broken, then I think yields will continue to rise. And that will put some pressure on some certain stocks that are high-yielding influences like utilities, and utilities did get hammered, and of course bonds. And I do think bonds do come to an end. Eventually that money will come into equities, but I do think you have to watch out for equity prices moving lower. And again, not saying that the markets are going to head lower tomorrow, but I do see continuing weakness in certain areas where what concerns me is one is the transports. Now, the transports actually rallied yesterday, and that was also a very good sign. The Russell 2000 is another thing I want to talk about. It rallied as well. Those are the two big leaders of the five we follow. But you have to realize Russell 2000 is going to be a really good gauge of any type of market tops, because you have risk off, right? We have these small cap stocks that give you a good yield, and of course they're a little more riskier. So when investors are happy and they feel comfortable, they go into these higher beta names where the money can be made rather quickly. Okay, so you got to be careful though, because we had the Russell actually back in 2000 topped before the other markets, and then if you recall, 2007 Russell 2000 was actually peaked 3 months earlier. So that is what I'm on the lookout for, and I want you to keep an eye on that, Russell. And you can look at that via the IWM if you don't have the futures. But it's something I want to go over today and kind of really get an idea of where we may be headed. Now, remember, we're getting a pickup of volatility, but we're not going anywhere. Eventually, that's going to play catch-up to what prices are doing, and we're going to be vacating the area rather quickly. So remember, guys, when you see volatility, intraday volatility, and we don't go anywhere, we end up really going nowhere other than just some really nasty, choppy price action. That tells me that volatility is picking up, bulls and bears are head-to-head, and eventually somebody's going to win, and that's what we want. Don't want to be first. We want to let the market break out or break down and then follow that trend, okay? That's what we're going to look at. All right, so let's go right into the spiders. And again, I apologize. There's really not much even we can talk about other than what I want to talk about as far as the IWMs and bonds. Keep an eye on this. I think this is something that we are watching closely, and you can see we have a long-legged doji right on resistance here. Again, if we break out, then we're going to challenge these highs, and if we start to break down, again, that 50-day moving average, that low from 2 days ago, is going to be really key. We take that 50-day moving average out at 210.25. Then we're going to head down to this lower trend line area here. So that's what we're going to be looking for, okay? Remember, also, we have non-farm payrolls that come out tomorrow, first Friday of every month. That's going to be a really big deciding factor, guys, too, as well. I think Janet Yellen, is a Fed chair, is going to raise rates regardless. That's what she had said. And I think it's going to be sooner rather than later, regardless of the fact they're going to be raising rates. You're going to have to, the markets will take a small hit on that, but then eventually will recover because of the fact is that the economy is doing so well. All right, let's take a look at the IWMs. And as you can see here, this is a good sign, okay? Now, but remember here, we are on a daily chart, okay? If we decide that we're going to break down from this area, we need to start to break down now, right? But this is a good sign for the bulls that we are not breaking down yet, and we're actually going to, looks like we might be challenging the highs. Now, the markets are down in the pre-market, but that's usually how it always goes. They've been selling in the morning, rally on at the opening, and then at the close they would sell them, tick them down a little bit again. So keep an eye on this, guys. All right, this is really the key. IWM. Let's watch and see if this starts to roll over rather quickly from this bounce and fail. I mean, and this could even look like, if you really look at it, I mean, it might be a little too big for a bear flag, but you know what? You could say it's an uptrend channel. If it breaks the uptrend channel, yeah, it's a little too big for a bear flag. But if it breaks this uptrend channel, then that's something that you want to take notice of here, right? So let's keep it like this as an uptrend channel. So this is what I'm looking for. I want to see the IWMs either break down or break out of this channel and challenge the highs here. Okay, so that's another one that we're going to be looking at. Let's take a look at the transports. Okay, it also bounced yesterday. But again, we're still way below the 200-day moving average, and it bounced on some airline news a couple days ago, as you remember, if you recall. But again, still an inside day from the previous day, and we're still under the 20. This is no question still in a downtrend, lower lows and lower highs. We do have bearish symmetry. Watch out for volume, and again, watch out for this key level. You can see that it has been tested. If we break down, okay, if we break down from this level right here at 150. I think we're going to take a beeline shot right down to this area here. You can see the volume zones. They're really, really light. And once we lose that area, then I do think that you'll see equities start to break down again. You know, it's very difficult to project. No one knows. If somebody's telling you we're going to break down in a week or two or whatever, they really have no clue. You can't go by just what's charts done. You got to see what price is doing. And right now, price is holding in there. And a lot of the other indices are ignoring what's going on with transports. So that being said, you know, you got to look for price to break down before you even start calling any type of major top, you know. All right, diamonds, same thing here. Long-legged dojis, two long-legged dojis back-to-back inside day. Really not much of anything. We did sell off the highs around like 130, and then I think we closed like down up like 60 or 60 bucks or something like that. But you could see here we're holding that 50-day moving average. It's going to need to hold. If it doesn't hold, then we're going to look for this lower area, 178.11. Okay, lastly is the Qs, and you can see the Qs technology has been holding in as well, as it has been for the last year and a half. We're sitting on this trend line, lower trend line, but look at what's happening. The last 8-9 trading days, we've gone nowhere. Okay, we've gone nowhere. And if you see here, if I draw this line a little bit more pronounced, you can see that we are in this huge sideways channel. Okay, and we've gone literally nowhere again. So this has been going on since early February, guys, and it's just it's crazy. It takes a toll on you when you're trying to be patient here. And again, patience is a virtue in this market. We definitely need patience here. All right, guys, that's it. It's a wrap. Let's see what happens. Pay attention to the bonds. Bonds are a little bit oversold right now. I'd like to see the bonds actually start to rally a little bit and then take a nice little position in bonds again on the short side. Keep an eye on gold. Gold looks like it's topping as well. And then again, the Russell and the transports for any clues that we might be topping here. Right now, we're down a little bit. I'm going to look to sell rallies here if, in fact, the markets put in a weak bounce. That's going to be my cue for today. Remember, that changes quickly, all right, depending on what the market does on the opening. So make sure you do your homework and your analysis and agrees with what I am saying. Have a great day, and we'll speak to you tomorrow. Take care, everybody.